security, portfolio of securities, transaction, or investment strategy is suitable for any specific person. This is an educational webinar. We're a publisher of data. We are not telling you what to buy or sell, so that's basically what the disclaimer means. And if you slide over to the next slide there, here's a reminder. Everyone should have gotten emails and pop-ups and information about this from Facebook or Twitter by now, I hope. But tomorrow through Thursday, we're doing something that people have been asking us for years, and that's a way to try all of Trade Ideas, including the premium functionality of the backtesting tools and the AI, without actually purchasing. And we had to do some changes to the code to allow this kind of permissioning. So you need to get in on this. Go to tradeIdeas.com/preview. Those of you who are already subscribers and don't have the AI, here's your chance to try it. tradeIdeas.com/preview. You need to sign up by 8 p.m. tonight, because that's when we do the process that activates all the test accounts for tomorrow through Thursday to have full access. We're going to have special hours for our trading room. That's the trading room hosted by Barry Anderson. We are going to run the trading room as normal through to the end of market, and then after market we're going to continue keeping it open until 8 p.m. Eastern, 5 p.m. Pacific, to answer any questions and help any of the new people trying out Trade Ideas for the first time to get started and get the most out of the 3 days so that they can make a decision. Thanks. We'll come back on later and talk about the specials. Until then, enjoy the dulcet tones of Jamie and Steve.
Thanks, Scott.
Yes, thank you, Scott. I didn't know if we wanted to mention anything, Scott, about we've gotten some emails today for people that signed up for the webinar. There was some confusion about a credit card or something of that nature.
Yeah.
So has that been resolved? Or?
Well, it's simply something we didn't build into the trial thing. There's a couple different ways to get to the entitlements, and one of the ways to go to the entitlements to get the real-time data asks for a payment first, and the other way does not. Most people seem to have found the correct way, but if you're having any difficulties with the entitlements, just wait until your account's activated for the free trial, and then you'll have no problems filling those out and getting into the account. It's just something we need to clean up for the next time, maybe at the end of the year, or maybe we'll do this again in the fall, that we decide to do a similar thing. It's very similar to the HBO free preview weekend thing, and I'm not sure that was Brad or Barry there with the phone call. But yeah, if you're having any difficulty getting to the entitlements, either go to the link that support sends you, or just wait until your account is activated and then go to the entitlements link, and it should be real easy to do. And the password reset reminder link should also work for those of you who have a computer generated password for the trial. So you know, bear with us. It's the first time we're doing this. We had to make some programming changes, so it's as smooth as we could make it the first time. It'll be even better in 6 months or so when we decide to do this kind of open house again. Guys?
Perfect. Thank you, Scott.
All right.
All right, ladies and gentlemen, as always, thanks for taking the time out of your busy days to come hear what Steve and I have to say. So, got some pretty interesting things on the docket today. Some of the usual things here, with a couple of the new things interweaved at the end here. So let us begin. All right, so as always, just to get started here, we're going to talk about, you know, where the market is, you know, and what might be happening in the days to come. So I just want to pull up the daily chart here. And we're going to start off looking at the SPY. And Steve, you know, kind of, you know, carrying out like we had originally, well, like we've been discussing over the past 5, 6, 7 days here.
Yeah, we've been talking about this action all the way back to that blue line down there off the 50-day moving average, where we could have gone either way, and the buyers showed back up there for whatever reason. You know, footprints in the sand are telling us that they did. Once they did that, we started talking about the range to keep an eye on, and that range we talked about was the upward sloping 10-day moving average, and then probably running into that 200-day moving average, as well as the 200 price level. Very impressive action, continuing on from what's been going on the last 2 weeks. The bears, short sellers are literally pulling their hair out. You know, once again, they're just not getting what they want. They're getting nice setups like Lucy holding the football for Charlie Brown, but then, you know, when push comes to shove, that Lucy pulls the football away, and once again, Charlie Brown lands on his back, and that's what's been happening here with these short sellers. They just can't get a break. And until further notice, that's the kind of backdrop that we're going to have to deal with and err on the side of bias. There's a bid in this market. For whatever reason, my 2 cents, I think the markets have figured out once again that the Fed has not going to be a real hawkish, like they said they were going to be. They had this grand plan of all these data points, some date points they were going to raise rates on, and they're already behind the curve on that. They can't even live up to what they said they were going to do. So me personally, that's kind of what I think is going on behind the scenes on this bullish price action that we've got. You know, there's just a solid bid in this market. Those spiders did not spend very much time trying to get through that 200-day moving average. So the spiders and the Dow are kind of leading. We're getting a little bit of lagging going on in the technology, so let's put the Qs up because there's something interesting lining up there as well. Again, just trying to keep it simple with a 200-day moving average, you can see a very flat-lined 200-day moving average, so there's really no edge going on over there, and the Qs are still trapped below their 200-day moving average. So, you know, this could be a tell to keep an eye on. If the Qs can't get through there and they roll over and start selling off, well, then keep an eye on the rest of the market. If the Qs can bring up the rear and push through and put a closing day, a closing candle above that purple 200-day moving average, then, you know, the bulls are still marching forward in my estimation. We talked earlier about where could we go from here. You know, if you go back to the SPYs, there was a level around 207, I believe, which was a high way back in December that I think we could be shooting for. And if you just put those crosshairs in there, yep, right up there around 207. That is the level we could be working towards. May not take a day or two, maybe it takes a week or two, a little sideways consolidation, a little 2 steps forward, 1 step backward type of action. But, you know, if the bears don't get a hold of this market quickly, that's the next level we could be heading to. So that's my 2 cents. Again, maybe I'm wrong on the fundamental reasons behind this market, but I kind of have a feeling it's a federal central bank type issue. They're scared to raise rates, and the market is sensing that fear, and they're feeling more free candy, free lunch, free heroin, whatever you want to call it. This market has been driven for the last 7 years by central banks, and so that still seems to be the play. But all we can do is look at the footprints on the sand and try and figure out where we've come from and where we could be going. So keep an eye on the Qs, see if those Qs are lagging and if they'll bring up the rear, or if they start to roll over, that could bring in some weakness to the rally we've had in the Dow and the S&P. But I found that QQQ chart very interesting with that 200-day cap slapped on it pretty hard.
It is, Steve, and it could be a nice reaffirming metric. If these things do pop above and we still get a little upward momentum in the SPY, I mean, this is very reminiscent of the mid to late 90s where, you know, that was when myself and Dan actually and you started trading in that time frame. And what did we hear all the time back in 96, 97? We heard Alan Greenspan up there talking about irrational exuberance and how this was crazy, right? And then what did the Fed start doing? They slowly started ratcheting up those interest rates, right, to try to keep the market in check. And even then, it ran for another how many years? Once rates started being tightened. So the fact that the central bank or, you know, all the banks are not increasing the interest rate is, I mean, you have to listen to that. We've seen this song and dance before. So no interest rate hikes, then, you know, nothing is for certain, but those are additional factors that we can use to our advantage, especially when we start seeing the charts like this. And then, as Steve pointed out, the lagger and the triple Qs here. So very interesting, simple type metrics to keep an eye on to try to give us that little edge that we always need moving forward.
Yeah, and I try not to get caught up on second guessing the Fed or what they're going to do, or we're going to have a Fed governor come in and be dissentive and drop a press release and try and job on the market back up. I don't get involved in that. All you can do is just look at the footprints in the sand and look at the market and try and find out where we come from, where we're going, what's our risk, what's our downside, because that game is it's a tough game to try and figure out the fundamental side of what the central banks are going to be doing here. So that's the market we have, and that's the one we got to stick with, so we'll keep with it. But in the meantime, it seems like the bidder is still in this market and holding us up and frustrating the bears.
Absolutely. All right. now let's talk about our friend Holly here and what happened with her today. So the first thing that stood out, to myself and Steve, and of course we saw all of these strategies loaded up for the hopper today. Late, well, it was probably Saturday morning once all those calculations have been done, and on Friday everything's done for Monday. So Saturday morning I took a look in here and I'm like, holy mackerel, look at all these strategies, and of course the majority of them being long. So this is definitely one of the larger starting teams that we've seen Holly produce since she came online. So, the performance, if we look at the trades generated per each strategy today, a pretty nice spread. And, of course, we had a losing day today. And I tell you what, let's just pull up the stats real quick here just to take a peek, because if we look at the report, we've been on quite a little run here. 1, 2, 3, 4, 5, 6 positive days in a row here. And of course, after our last losing day, we were 1, 2, 3, 4, 5. So, can't say it was absolutely predictable, but those losing days are going to cycle around every once in a while. Now, the interesting thing to point out about today was that we were down $2.47, or we could look at basis points as well. So out of $2.47 in all of these trades here, if we look at the all trades blotter here, stretch that out a little bit, the biggest loser on the blotter today stuck out like a sore thumb. This stock's been all over the place here lately, VRX. So when we look, here's where Holly recommended it. It was a high-risk trade to begin with, and that's why you see such a large, let's see, our smart stop on a $30 stock. The system was telling us, okay, if you want to trade this stock, you better give it at least a couple of bucks as a stop loss, just because of the nature of it. So, we were talking about this earlier, and, Steve and I are always talking about, the charts that we like. We have an intraday, and then, of course, we always have a daily as well. So, of course, it's just second nature to look at the daily. So a lot of the times on these long plays, when you look at the daily, it's going to be in the range or approaching some resistance or some support. But the thing that popped out about VRX today, when you put your trader's hat on, is we're kind of off in Never Never Land. When we look at the daily here, the last bastion of support, right, Steve? Was
that's no man's land down there, exactly.
When it cracked, and it's not like it traded through that level. Of course, we have the nice gap down to get us down there. So, it was a high-risk trade, and, unfortunately, that's the one that got us today. So, 2 points on a trade where we're down, a little over, not quite 250 on the day, it's going to happen from time to time. And, otherwise, all the other trades combined, kind of a digestive type performance on a digestive type day. Yep. When we look at where we were, in this little upcropping here, so could be an interesting week. We could go sideways for who knows how long, or we could bust out tomorrow. We never know until the next day comes. So, when we look at this column right here, the non-exit column that shows us how we would have done had we stayed in these stocks, nothing really jumps off the page too much today. Stop losses are doing their job. Some of the timed exits worked out well, which would have turned into small losers had we held them. And so from a trade around perspective, things that we can take away from Holly that aren't necessarily reflected in a back test or a statistical survey. One of the ones that stuck out today for a trade around was the PAC-W. We got stopped out as soon as Holly made the entry today, and here's the, obviously the daily here, but the 5-minute right here. So interestingly enough, the signal came right here in this bar, and of course we promptly got stopped out. But the interesting thing to point out again about getting into the habit of looking at that daily chart pattern is that, so Holly gets into a trade. Maybe she's still in it. Maybe she got stopped out already. But as we all know, sometimes the timing is just a little bit off. And of course, that's going to result in a stop loss. However, we as traders are going to continue to watch some of these plays, especially if you pulled up the daily
Yep.
and saw where it was in the range, right, Steve?
Yeah, that looks like a lot of the charts that we've been talking about the last 2 weeks and some of the charts we'll be talking about today. So, you know, if you are not using a daily chart, I can't imagine that you wouldn't be, but for anybody that isn't, you really should consider a daily chart, because if I had to choose one or the other and I only got one choice, it's not going to be an intraday chart. It's always going to be a daily chart, because that's going to tell you where the bigger picture is, where the tightness of the consolidation is. A nice tight range in that one, getting ready to hopefully break out. It's going to tell you where the supports and the resistance levels are going back in time, which you know, have a memory and continue to show back up. So if you're not looking at the daily chart, you really should be. And what Jamie's saying here is that this daily chart was a really nice looking daily chart. Yeah, we got stopped out pretty quickly in the Holly trade, but the initial direction was up on a really good looking daily chart. So, you know, it doesn't hurt to keep checking back throughout the day and see what's going on over there.
Sure, and if you know you see Holly get stopped out, you're like, okay, well, I'm going to keep my eye on it and wait for what I perceive to be another good time to try to play the stock long. So, you know, depending on what type of person you are, you know, a lot of the times when a stock is, you know, getting sold off and it puts in this little bottoming tail here, especially when it's followed by these little green up bars, well, then we can always assess risk. We're like, okay, Holly was off a bit in the timing, got stopped out. I see this pattern forming. You know, it's a low risk trade at this point, you know, when you know what your exit is by, you know, judging by the bottom of that wick here. If that's a little too soon, then we can see once it spiked back up here, boom, it takes another pullback. So, you know, in this little consolidation right here, which is also one of my favorite things, little NR7 5-minute pattern there, or what appears to be that pattern. And then when it comes back down here and coincides with that. So, you know, whether you're this type of person, where it comes back up here and you see it falling back down to this little initial short-term resistance level here, there was some really good opportunities to replay the PAC-W based on what we saw here. This is what gives us the comfort to do that. You know, picking bottoms on an intraday or trying to identify a bottoming pattern, you know, when we know that, you know, well, unless we get below here, I'm not even really going to be that worried about it, right? Gives us the ability to pick these a little easier. So as far as trade rounds go today, that's really the only, you know, only juicy one that I saw today that presented any re-entry possibilities here. If you are a downside trader, you know, if you are a downside trader, obviously you're going to want to continue to hawk this thing, because right now, where's the support? You know,
China.
You know, it's nowhere to be found.
It's in no man's land. Yeah.
Anywhere in the near term. So it's in no man's land. So if you're a short trader, you know, obviously you got to be nimble with this one, but you definitely want to keep tracking it.
Yeah.
Okay, so also too, another feature to point out about the limit alert window that is coming up pretty quickly here, and I'll just pull my limit alert window over, which kind of brings us to a good point to bring up FIT, Steve, because we were talking about it last Thursday's webinar, and talking about how to use the limit alert functionality to create what we call brackets, right? And just to help everybody visualize what a bracket is, I just pulled up the stock fit. We're looking at the daily here. And on Thursday, we set up this bracket right here with the limit alerts to say, okay, of course, today's action, it actually triggered, but we were setting a bracket play. If it pops above this little range right here, we want to know about it, or if it pops below it, we want to know about it as well. So the trigger popped today. We could see created, let's see. There we go. Okay. This little column was hiding from me at first. Now, we can see that FIT triggered today. The alert was created back on the 17th, and then today, about 45 minutes before the close, it triggered as it popped above that level right here.
Mhm.
So also FIT is our
Trade of the week.
TOW as well.
So
So
yeah, since that's already out in the email, that went out about 11 a.m. Eastern time this morning. We had a lot of consultation about it within the ring, and we decided to get a little jump on it because the setups weren't really as good this week as they've been in the past, but FIT just really stood out, and I loved the consolidation and the tight sideways range. We went ahead and made that the trade of the day before it actually even broke out from that bracket because I had that feeling that, and let's not even talk about the short float percentage, it's supposedly above 85%. These are the kind of setups that I really love if you can get the short float to pop. And I'm pleasantly happy to see that the trade of the week went out and it actually crossed above the bracket upside alert while the trade was out and already active and live. So got kind of a good head start on that one if you are a member of the trade of the week email. If you're not, you're only first hearing about it here now. But we did talk about it last week and why we had it on the radar. And these, again, are some of the setups that we're trying to configure and make calls for on the trade of the week because we feel on the daily charts there that they've extended themselves to the downside and they're starting to become a threat to the short sellers. And when you sprinkle in the high short float percentage on some of these setups, then they start to really get interesting. So I'm very pleased with the way FIT closed today. If anybody is in it, that's a great start because I think what's going to happen is the way it closed on highs today, and what I'm hoping for and predicting tomorrow, I hope they both happen, is a nice situation where if you didn't pick up and buy it today, they're going to make, they being the unintended consequences of the market counterparties out there, they're going to make you pay up for it and chase it. So I'm really hoping to see a gap up tomorrow and a quick round right on the open, no messing around, no shakeouts. Typically if this thing is going to go, this is the type of dynamic it's going to see tomorrow. It had a really nice close today. It's trading up a little bit higher there on after hours. You can see on Jamie's purple shaded area, not too much volume, just some ticks, but definitely not coming back. I'd love to see a 10, 15, 20 cent gap up tomorrow and just go. And if that's the case, we know we've got some good short float percentage tinder in this fire. It could take a few days to cover. This could be, I know I'm getting 2 or 3 steps ahead of myself here, but let's say it does go tomorrow. I'm going to be inclined to just let it run and let it run for at least 2 days because there is a lot of potential energy pinned up in this thing. And if these shorts are going to start to get scared and cover, the typical day and a half that I like to sit in a big pop on a stock daily chart might be cutting yourself short. So this could be a 2 or 3 day hold if we get our move. And then that would be a perfect scenario to maybe sell half if you get a nice 2 or 3 day push. Sell half and you're in the money playing with the casino's money to hold on for longer, better, greener pastures, and you don't have to suffer through any major drawbacks because you took profit on half. But again, I don't want to get too far ahead of myself, but I'm really happy with the way it traded today. It triggered the upside breakout. We anticipated it a little bit in our trade of the week email, but that's fine because so far it's working. But if we get that gap up and go tomorrow, this thing could have a few days of run in it.
yes, indeed, and that's the way it's looking right now. If anybody was watching FIT, obviously I was watching it as soon as my limit alert sprung. And the interesting thing is, after this little bar here, the volume kind of dried up a little bit. I was monitoring that 1, 5, and 10 minute volume, and then of course, as the close, approached, the volume kicked up in it, and it's trading slightly higher after hours. But I have to agree with everything that Steve says because we've been tracking this thing for so long. That's just what it feels like, and assuming we don't just have a massive gap down tomorrow, we'll see what happens. Should be interesting.
Can you go back to the daily chart there? Because people have been talking about FIT for probably a month now, and it has not been of any interest to me at all whatsoever. Matter of fact, let's pull over the free stock charts. I just want, because the functionality is coming, but again, I just want to try and keep this really simple. Why all of a sudden it became interesting to me. Look at how the moving averages have regained control. We had a bit of a big pitfall. I believe that may have been earnings. It looked like it was trying to do something, and then the earnings came out, so you always got to be aware of when earnings are coming out. But once the earnings are out and behind you, you don't have to worry about those for a few months. But what's changed? What's changed is the price has climbed back above that 10-period moving average and is now resting above it. Same with the 20. So prior to all that, it was just a mess. It was below its moving averages. You're pretty much picking up a knife, even before that, Jamie, way back where.
Right. This whole way. Yeah,
Look at that. I mean, the moving average was a guide in leading it down to these levels. And then it popped above, probably got ahead of itself, looked for some earnings. Now, I would never have held this stock going into earnings play. I just don't do that. You might as well just gamble because it's impossible to get out when you're wrong. But once the earnings are out, okay, those sellers have been washed out. Well, the buyers are coming back in. Earnings are no longer an issue. But now we've got the technicals showing us, for once, it's finally looking good to me. It's taken a little while. There's people that were trying to capture this thing back in January and February, but I have no idea why they'd be trying to do that based on a candlestick, tail maybe back there in January, but still, you're below your moving averages. I want to see these short sellers and the sellers just get completely expended in a slow creep back up and just rest on the launching pad of their 10-period moving average. And that is the image that got me finally interested. I think last Friday, started getting interested in it. Last Thursday and Friday, it started to pop up on my radar. And so it evolved into the trade of the week this week. So knock on wood, fingers crossed. Hopefully this will be a good one for everybody.
Yep. And then when we look at the short float here, Fitbit, at the top of the roost, showing not only a high short float count or percentage, but over 100%. We always get the question, well, why is it showing over 100%? Well, we get our market data directly from our data provider, who gets it directly from the market, the raw feed. So this is what the market is reporting. A lot of other websites are reporting the same value. So when we see something over 100%, we can only assume that there's some naked shorting going on somewhere in the system. Otherwise, theoretically, it shouldn't be possible to get above 100%, yet this is not the only time that we've seen this. We've seen this over and over again in other issues as well.
Yeah, the last time I saw it last week, the value was at 85%, and that was good enough for me. So I'm just going to continue to call it 85%. I just don't understand how it can get above 100. But like you said, naked shorting, you've got so many people shorting this thing, it's beyond the actual float that there's some illegality going on in there. Some brokers are not having possession of shares, and they're letting their clients short naked shares. And so that's the only explanation I can think that will get a value over 100 like that. But nonetheless, last time I checked, it was 80, 85, and that's pretty intense as it is. So that's why it's at the top of this list.
True. Just throwing that out there for anybody going, well, how can it be over 100?
Exactly.
Right.
Yeah. Common question.
Mm-hmm. Okay, so while we're talking about these plays, they fit perfectly in with the limit alert functionality, because when we find new ones, so BOFI. A little bit different of a play. This one's already stretched out in the short term, really of no interest. But as Steve and I were discussing earlier, it might vacillate in this region right here for a while. It could go down to here, it could pop up to here. But, once phase 2 kicks in, if this thing pops above, the previous high from back in December right here, well, then it's going to have room again, up from 14 up to 22. That's a significant move. But looking at where the stock has come from and where it might go, might be something to keep an eye on, the BOFI. But the reason let me just pull up a different one here, Steve, something that we can actually set a limit alert on here.
Mm-hmm.
So how about, well, actually I already set one for, give me 1 second here, where did my window go? She's hiding from me. Well, when all else fails,
Yep.
you can always just hold this always fire up a new one here. Okay. Well, price alerts window. Change the name of it on me on this latest build. They like to do that. So for example, I set a couple of, this is the old fit one. But, for example, this little guy right here, let me shrink this intraday back up a little bit. So OPWR, here's that same pattern, right? And this one has a gap to boot. So it closed right here today, slightly, below these highs right here. So I added that that high alert. Now I could bracket it as well. And what we've done recently, so if I want to create a bracket, we just right click on the chart, create that price limit right there. And you guys won't see these buttons just yet, but these are coming up in the next build. So we'll be able to say, okay, short alert, pick the direction, bracket.
And let me explain why that's important, because sometimes we talk about setting a pullback alert, and the way it was set before was kind of unclear as to whether or not you wanted to designate that trade as a short trade or a long trade when you track the P&L after it's been triggered. Well, now if we want to set an alert below the price, we can pop in an alert below, but then code it as a long side. So when it dips down and does trigger that alert is activated, but it's still calculating the P&L as if it was a long, as if we were looking for it to base, to turn back up and start to go higher. So that's a great functionality. And again, my hat's off. Dan says it all the time, and he's right. You know, the development team at Trade Ideas is lean and mean, and they come out with new versions and new fixes and new updates faster than anybody I've ever known in this industry. So going forward, that's going to be a feature on the limit alerts. Not quite yet. It's the developer's build, but when the next 0.58 beta version comes out on our website, you'll see that functionality will then soon be available to you guys here in the next few days.
Exactly. And another cool thing that we've made available here is, in the past, if we wanted to change these lines, we'd have to go down here and right-click and cancel it, come back up here and reconfigure it. Well, now, assuming we go to Properties first and remove the crosshair, now if we want to change these things, we just grab them and move them around, and you'll see the price change automatically down here for you too. So you can just slide these things around. You want to make it down here now? No problem. Scroll it back up to here? No problem. And these prices will automatically adjust for you. So make it a lot easier to move these lines around, which is a really cool feature. Saves you a lot of keystrokes. But everybody just keep in mind, to make that work, you have to pop into Properties and unclick your crosshairs. Same thing when you're moving around arrows on charts, things of that nature. Which brings up a good point here. Like in the future, when you put an arrow here and you try to grab it, you're like, hey, I can't move this guy around. So just like the lines now, as soon as you remove your crosshair functionality, you know, you can reposition this guy anywhere you want it, make things a lot more precise. So simple little things, but things that are going to make your life easier moving forward, which is the goal, of course. So we've got quite a few stocks, Steve, to kind of put into the people's brains here today to let them track them moving forward. Mm-hmm. So how about we move on to the trend change and the hidden gems, and you know, we can reiterate the patterns that we've been showing this far and how we're coming up with the new ones and the source of the information here. Because like I said earlier, these plays that we're going to be showing you, or these setups to watch, are perfect for setting up these limit alerts here. So we'll get the trend change pulled up and the hidden gems as well. Kind of share with everybody how we're finding these nice daily patterns here. All right. So of course we've already talked about fit, and just while we're on the topic here, we can see that not only is fit showing up in the trend change lubricant, but in the hidden gems as well. Sometimes you'll have duplicates. Sometimes one will be on the other and not the other one. So
just to jump in here, the hidden gems these are all stocks with some decent fundamentals. They're turning a profit. They're making money, and for whatever reason they've been beaten down bad. So when I saw Fit turn up on the hidden gems board, it just reminds me, hey, this is a real company, got some decent fundamentals in there. So there are times where there will be some overlap, like Jamie just said, in a different top lists. But the hidden gems, for those that are wondering, are basically ones that are showing some decent quarterly revenue growth.
Sure. So I think we already kind of showed the OPWR with the the nice little channel break there. So this is a really good one to keep an eye on, because if it does penetrate in the next day or so, whoosh, we've got a little gap to contend with there. No short-term resistance until, kind of about right there. So it could be very interesting.
Gaps were made to be filled.
Absolutely. So what do we want to talk about next? You want to look at the TXTR?
Yeah, I kind of liked that one. I liked the way that one was setting up. Again, there was a little slimmer pickings this week looking at some of the setups, but on the daily chart there, why don't you expand it down? Yeah. I like how it went to lows, built a base camp there on some good volume, made another push, and it's been just going sideways here for about 2 weeks. And a nice thin channel as well, not a lot of volatility. So this could be one for, another type of one where you could bracket on the upside or bracket on the downside, but quite honestly, the upside is the only place that I'm interested in seeing if it can turn back above that narrow channel that it's been building here the last few weeks. And again, what I like is this isn't coming off of fresh lows. This is coming off of a nice base that was built back there in late February with some good volume, and it's on its second push higher. So it's definitely showing some life and some trend change dynamics to it. So anytime I see a nice sideways flattening like that, I'm interested. So the limit alerts are a great feature to try and bring that to our attention.
Right, and then a couple of stocks are good examples of things that have already, like for example, here we're looking at SGen, and whether we thought this was a good one or not, look what's happening today. It's popping its head above. So, had you had that limit alert set right there, you would have got that alert today, and then, easy to make the decision based on knowing what your long-term risk is on the bases that are developing. Another one that poked its head out today was the QDEL. Right here, popping above. Now, is it going to continue, or is it just going to pop up here and then, head back down again? Those are all factors that we always have to take into consideration, when we're thinking about actually executing one of these trades. We have to look at the short-term resistance. And then, of course, Steve and I like to factor in the short float as well. So, while a lot of these charts may look the same, when you start getting it down to the nitty-gritty, short-term resistance, short float, build up, these are all things that add, fuel to the fire, assuming the fire gets started in the first place.
I will add also on this one, on that QDEL, if you go back to the daily chart, we finished the day off way off of highs, and we have a nice big wick there to the upside. Typically, that's not something I'd want to jump into on the close or even the following day. I foresee this one is moving in the right direction, but the train left a couple days ago. It's going to have to pull back and digest and probably consolidate for a day or two. So, where those levels could be are something you can watch for on the intraday. More than likely, it'll probably try and test today's lows right there exactly. It'll probably try and test that going into tomorrow. But the point I wanted to jump in and make on that daily chart is that third up day there with a big wick on the top side is not something that I would jump in and chase. I'd let that wick, that reversal wick, let it play itself out, let it digest for a couple days, and then it may set up again. But this one is definitely on the move. It's just probably a day late today, so we can continue to watch it, for the next type of setup.
Certainly, and hey, this is a great example, not buying at the top of the wick or, shrunk back so rapidly. So that's all good information, Steve, of, letting people know which ones to look for, for that entry. The opportunistic entry points, I should say. All right, so go ahead, Steve.
Oh, I just said what next? Where are we next?
Well, the WAC, I forgot, let's see. We haven't talked about WAC yet, have we?
I don't think so. This one's a little bit more premature in its trend change reversal, and again, it had a couple of nice little green days there real quickly, but this could be one to just watch and see how it trades over the next day or two. It could be a little consolidation, ideally, maybe a little sideways action and then another pop higher. But I like the volume in the last couple of days that is there. I like the fact that it could not go to another low. So again, here's the same type of setup we've been looking for. This one just may be a little bit less baked than some of the other ones, but still, I think it's going to keep me to keep this one on my watch list and see what it does from here.
Right. So just to reiterate, especially when we see setups like this, you know, obviously we really want to watch this because there's no resistance here in the short term. And if you sprinkle in some short float with that, even better. Because hey, you know, we could drive ourselves crazy finding repetitive patterns like this that all look the same. But it's those little nuances that are going to help you determine, you know, hey, this one does have potential, and if it does pop, it's going to be worth my while. You know, we're going to have a good risk to reward ratio. All right, so, you know, as Scott said earlier, just want to remind everybody once again, tomorrow, Wednesday, and Thursday is going to be the open house, the first time that we've ever given free full access to anybody that wants it for 3 days to see the power of trade ideas and the AI channel and the backtester. So you get the whole schmear there, you know. Everything's going to be open. We're going to be hosting, well, we're going to be conducting business as usual, and then when the market closes, we'll be extending the trading room. What is it again, Steve? Until 8 p.m.
Eastern time, yeah.
Eastern
And
time?
I just went ahead in the chat window, which everybody has access to. I dropped in a link to sign up for the 3-day trial starting tomorrow. Essentially, it starts tonight, like Scott mentioned earlier, at 8 p.m. Eastern time. This is going to freeze and go live. So if you haven't done it and you were thinking about doing it, you can use that link that I put in the chat window, but make sure you do it before 8 o'clock Eastern so you're a part of the final group.
All right, Steve, I think that kind of wraps it up as far as what we have to say today. So, Scott, if you're listening, it might be a good time for you to come in and talk about pricing and things of that nature for the people who are not yet subscribers.
Yeah, well, sure. And also those of you that are subscribers and want to get access to the AI, you'll be able to try it out over the next few days, but we also have a promo code that lets you save some cash. So, we're a software as a service company. Everything for the regular data is subscription-based. It's monthly or annual. Obviously, the annual saves you a bundle off the monthly, but they both have the same thing, no contract, $99 a month for the monthly, $888 a year for the annual. It includes all the data and the charting. Very important. It also includes your training. You can immediately when you get a subscription, you should go to the support section, click on training, and pick your preferred time and date for a training session. You get a full hour one-on-one with either Jamie or Steve. Now, to get access to the AI, Holly, all that good stuff, you need to own the OddsMaker AI license, which is a one-time $1,100 cost. It lets you find trades that are working in the market now. You can also work on backtesting your own strategies by using the OddsMaker with no programming at all. So now we have a special this week, and we have a code. It's Holly23, and it needs to be all caps, HOLLY 23. And that takes half off your first month, 20% off your first year, or 30% off that OddsMaker AI lifetime license. So, for example, if you're on the monthly and want to get the OddsMaker, you can pick that up for just $770. Or if you'd like to upgrade from a monthly plan to the yearly plan to save, you can get in and save extra at just $710 for the first year, and then renewing at $888. This code, Holly23, expires on Friday, and a business on March 25th. So if you're going to use it, go ahead and use it by then. Now, we also have a package. You can also use that code on the package. So if you go to this page, that we have a short code to get to, bit.ly/AIHolly is all caps. And I made it super easy for you to not even have to remember that. In the handouts panel of your GoToWebinar interface, there's a PDF there for you to download that has this and the previous slides information as well. It makes it super easy. Go ahead and do that now so you don't forget. But when you use the code Holly23 on that page that you can get to by going to that short code link, you can enter that code after you click through to buy the 1988 package, and that drops it down to just $1480 out the door, so it saves you over $500 right away. Great way to do this. So this webinar has also been recorded. The recording will be up probably by tomorrow morning, if not later tonight. You'll want to check your email for an update about that around this time tomorrow. Those of you who've signed up for the free preview to try out Trade Ideas subscription or the AI, we are looking forward to it. We're going to have extended trading hours in the trading room after market tomorrow, Wednesday, and Thursday. If you do not currently have an active subscription and have been asked to pay before you can do the entitlements, don't worry about it. Just try to do that entitlements after you've received the notification that your test account's active, and you won't have any problems with that then. Email info@trade-ideas.com with any questions at all, and looking forward to seeing you all in the trading room over the week.
We'll be there.
Jamie, Steve, thanks guys.
Thanks for stopping by, everyone.
All right.
Cheers, everyone. Bye-bye.